We've been going now 23 months. And remember, these are the figures at, it says on there the 12th of the 10th. I'm sure they were at the 30th of September. And at that point, we had invested just under $50,000. The account value was 67,300. It's not very good at the moment, but it's still 68,900 almost. So it's more people to admit. There we go, admit. So it's certainly up on the month. What else have we got in there? We've got some big figures. The profit without drag was 81,000, and that's certainly up. We're up there. We're at $99,002 in cash in the account. We've got stock buying power of 43,000, account value of 69,000. So we have actually got some money. So it's going all right. If you include the drag, we've made if you don't include the drag, we've made 17,000. But if you look at the money that's actually in the cash waiting to be converted across to net value, then we're up at 81,500. So as long as we can drag some of that money through, we're doing okie dokie.
Can I ask a question, Jeff?
You can. I don't know if I can answer it, but you can ask it.
You normally manage it very well indeed. Right, following on from the training session, which was absolutely brilliant for those that didn't go, you need to go on it. It was fantastic. That profit without drag is a figure. I'm aware of that. But when I saw the one on the 2nd of the month rather than the 12th of the month, so this is 10 days further on.
I'm not sure it is. I think when you open the date, just updates itself.
Oh, okay. All right. Well, it's similar, but obviously I saw the date change. What I'm hold on. If you can go, sorry, if you can just go back to the top. What I'm confused about is obviously within that option drag is all the positions that we've taken on all the shares that we own. However, I can't see any correlation, if there is any, between the fact that every single one of the shares is under the price we bought it for. I understand, that we've actually got money off the back of, making the offers and everything else, but there's no correlation on the dashboard as to when those options take effect. So I can't fit in my head.
Right, there's a couple of things.
Where the £81,000 comes from.
Yeah, when good old Eunice put this together, she missed some of it off. So there's more detail to come on the next one. But we have two types of drag. One is price drag, and that's where the price that we paid is below the price of the stock now. So that's called price drag. And the other type of drag is the money that we're waiting to come when the put options in particular that we've sold expire. So, the drag is actually made up of two figures anyway. So there's a positive figure in terms of money waiting to come through from expiration, and there's a negative effect from the prices of the stocks that are below the current prices. So that actually takes that into account.
Yeah, if I can just give you the obvious example.
There they are. Price drag 20,000. Options drag 43,000.
Yeah, if I can just sort of take you to one individual point that stuck out for me, which is EDU. Obviously, we paid $20 for it, and the price now is $2.05. So we've actually lost a lot of money on the share itself. But I can't. I mean, obviously, we got paid for doing that. Okay, but I can't see on here how much we got paid for doing that.
No, because what this can't be is a record of every transaction and every
understood.
Trade.
Understood.
But yeah, I can show you that. That's no problem whatsoever. But this is just a monthly sort of where we stand. It's not an every share and every. I mean, we have 33 33 options. So it's definitely not going to do that. I'm not going to try and give a point in time position on everything that we do. It's an overall, it's a summary.
And I do understand that as well, Jeff. But when you look at the value line projections, 3 to 5 years, and this is probably too soon, that the low value is $18 for that. So obviously, I'm assuming we got paid handsomely, okay, for taking shares at that sort of price, and then making money on it, waiting for that even that low price to kick in. But again, I understand you can't show everything. But maybe you could just...
No, but I can tell you everything.
Yeah, go on. Yeah, could you?
Yeah, I can. Well, I could if we hadn't already done something with it. Edu, there we go. I've got it. $20 for the shares, and we had only got $5.58 in. But it's sort of only part of the story. I suggest we finish with that for the moment. And when we stop sharing this and start sharing the trading platform, I'll show you what we've done.
All right. Okay. No worries.
Okay.
But does the question make sense? Can you understand what's going on in my head?
Yeah, of course I can. Yeah, it makes sense. It's just that the answer is...
Yeah, that's fine.
It's complicated.
No, so I can wait for that. Thanks.
But we've had, I mean, it's been a potential disaster. EDU is an educational company that provides services in China, and they provide, for example, English language training, but they go a lot further than that, and they provide visas for students to do all sorts of things. And the Chinese government turned around a month or two ago and said, we're not keen on this idea. You're making too much money. We want all of your staff to be Chinese. And they had a lot of staff. So they've had to basically throw them all out and start again. But they are reorganizing themselves, and their star will shine again. In actual fact, it's even though the market's down this week, they've started to rise slightly to 216 now, which is still nothing to get excited about. However,
I'm sure that would be the case because their underlying worth is contained in.
Their value line report is fantastic. They've got money in the bank, everything else.
Sure.
But that's not our strategy. Is not to just wait passively until they sort themselves out. So when we get to the next screen, I'll show you what we're doing.
Cheers, Jeff. Right.
So let's go straight to EDU. You can see this.
Yep.
Right. So EDU, we've got those shares that we know we paid. Well, it was actually an average of $19.50. And what we've also got, and that is for 300 of them. So to counteract that, we also sold a put on 700 EDU for October for the $4 strike price. And we got $1.95 for that. So in round numbers, we're going to pay $4 for these shares, but we've had $2 discount. So we'll have 700 at $4, 300 at $20. So we're starting to dilute it. Before it got down to the $2, we actually did the same thing there. We sold some at a put, 300 put at $10.50, and we got $4 income for it. So by the time you add this lot together, 10 at a lower price, 3 at that price, we're bringing the average price down. It's about $6. So we're down to about $6. So although it was a disaster, we bought them at 20 and they're now worth 2. The action we've already taken has got our exposure down to about $6.
That's great. I understand that wholeheartedly. Thanks for that, Jeff. But is there any further action we can take now on that?
Oh, absolutely. Yeah. I mean, there's lots of things we can do. We can just buy some more shares now at $2.16. If we bought enough of them, we'd bring that average down further. But what we want to do is to get paid to buy those shares.
Oh.
So, expeditiously, we will keep selling more puts on them at low prices so that we bring the exposure down, down, and down. But my main objective at the moment is to get it down, get the exposure down to an average of less than $6.50, because the short-term forecast on EDU is $7. But the rule is we don't lose, so we can't lose. That's what the rule is. But yeah, it has been a pain. But it can be a pain all it likes. It's still not going to be a problem.
Sure, I should have listened more at the training.
No, I mean, if it had been used as an example there, fair enough. But it is something that is unusual. It's the first time we've seen anything like that. We don't want many of those.
No.
Chinese government. What I also want to do is let's have a look at one that is in trouble, but not in as much trouble. And that is BBBY. It's bed, bathroom, and beyond. It's a retailer. I presume they sell beds and bathrooms and more. And we've got 300 of these shares, and it doesn't show the average open price there because we got them through. But let me tell you what the figures are. We actually paid $40 for those shares. Okay. And we got $13.20. So that was the first thing we did with them. So we got $13.20 in put income, but that still brings the exposure down to $26.80. And to show you how much this has fallen in recent weeks, we sold a call, the right for someone to take them off us, at $32. And we got $2.40 for that. So we're down to $24.40. But the current price is $14.45. So we've still got a $10 gap there. We can sell it and then sell another put on it and end up in profit. And that is a fairly magic situation. So let's just do the maths on it. We paid $40, so that's $40 out on the deal. If we sold it now, we'd get plus $14.65. That would still leave us $25.35 underwater. We've had $13.20 in put income, plus we had call income of $2.40. So I can't actually do it yet until that expires. So that's $24.40. We're underwater. If we now go to the option chain, and if we go forward to recognizing it's a retail stock and they'll hopefully get good results in over Christmas, we can take it out to January 2023 and get $26 in premium income, which will put us ahead. All we have to do then is to wait for the stock to get to which we think, and then we clear on it. So we can absolutely make that disappear. The fact that we're using January 23, don't worry about it. We've got no intention of waiting until January 23 to close that deal. At some point, we'll be buying it back and selling it on again. But that's just an example of where you can get a really big difference in the price of a stock that's put to you and that actually is the current stock, how we can get out of it. There are several ways. And
so what's the disadvantage of going that far ahead? None, because you can sell it at any time. Is that what you're saying? Or buy it and sell it again? So there is no disadvantage.
It's basically kicking it in the long grass until the circumstances change in our favor, and then we can sort it out.
Is that what you're planning? Is that what you're planning to do then?
Oh, absolutely, yeah. But we go into here. We have an October call, a $32 call against it. Obviously, nobody wants to buy them off us for $32, and they can buy them from the market for $14.65. So we need this weekend for that call to expire. We just keep the money. Otherwise, we're not allowed to sell the shares and trade further in them. So I'm biding my time in order to get that $2.40 and potentially for the market to rise a bit the next week or two, and then we'll do it.
Okay, but doing it so far in advance, does it affect our buying power significantly?
There's the price, $26.05. Plus we'd negotiate, and there's a nice big gap there, so I'd expect to get more than that for it. But if I verify it, the buying power is twice the total cost. So it's very, very low. Very low.
But if you tried to do it now, the system would stop you doing it. Is that right?
No, it wouldn't stop me doing it. It would treat it as a new trade. What I want to do is the rest of the trade, the other components to it, which is sell the shares we've already got. Otherwise, we would end up with the shares that we've got and a position on the put, which would take it over the 5% that we want to have it as part of our portfolio at.
Right.
For October, and if you notice, we've now got shares in 1, 2, 3, 4, 5 stocks. I'll just remind myself what the figure was, but when we were looking at the dashboard, it was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 stocks. So I've already got rid of some of those stocks where we didn't like the price. So I've already put them back into profit by selling them ostensibly at a loss and then selling another put on top of them.
Love it to bits.
Yeah, so it never gets left alone. Basically, it gets rived about all day, every day. So yeah, we're on it. Not a problem. So just going down, see what else we've got happening this coming weekend. So we've got a call expiring on those BBBY. That's all right. I'm not worried about that. We've got CCL. So we've got a 32.50 put expiring on CCL, which we've had $7.15 on. So we're exposed to 25.35 on that. The price on that at the moment is 24.28, and it's already been reduced really for expiration day. So I'm expecting that in the next week to go. Yes, we got the shares for 32.50. I expect that to be in profit of its own accord within a week or two. So we'll just accept the shares on it. Next one, what we've got is EDU, which we've already discussed. FLR, so we've got a $25 put expiring. That means it's coming to us for $25 at the moment. And we've had $6.70 on it. So 25 minus $6.70 equals $18.30. And the current price is $16.32. So again, if we look at the chart on it, yeah, it's definitely going to get back to a good place within a few weeks. So quite happy to take it and even sell calls against it until it does that. One more, which is PRDO. Again, there was more than this, but I've already bought them back and sold them forward for an additional credit. So PRDO, current price is $10.91, and we're saying 15. We've had $3.40. I just haven't even bothered pushing it forward because I'm so confident that it will be in profit within a couple of weeks, and I can still do it in a couple of weeks if it isn't. Unfortunately, I can't show you the overall market chart on this computer. I've got another computer. But what we are doing now is saying, whoa, hang on, the market's a little bit flatter than it was. So when we're selling puts, we're tending to sell them closer to the current price. So they've got less work to do to get into profit, and we potentially give them a bit more time as well. But we certainly don't stop doing it. As an example, we'll do one. Just find one, KHC. Just check we're not in it. We're not in KHC. So KHC, Kraft Heinz. And we'll have a little look at the chart. Now, the put that I've got in mind for this would be 42.50. So it's about there. And so there's $42.50. It's certainly been higher than that, drifted down during COVID, and the way it goes up. The current price is $36.80. So we might even, depending on the strike prices, come in at 42 or 41. And we will get enough money that we will actually make our exposure below that current price. So let's have a look at the options on KHC. And we're talking about, now we're looking at sort of January time. So the current price was about 38, so it's above that one. So if we're going to do it, we need to have enough space above it so we can do the trade and put the lid order in place as well. And it's 610. So the current price of the stock is 36.95. So 42.5 minus 610 is 36.40. So it actually puts us about 50 cents below our exposure, below the present price. Are we happy to have a go at that?
Absolutely, go for it.
Okay, so 42.50. Click on here. We only want one at the moment. There's not a great deal of negotiating to be done. I don't think it's got 5 cent intervals, because it might. So I'll check that just by putting one in, and look at so actually it has. So the live price is 6.15 by 6.30. So we probably won't get it, but we'll try 6.25. See what happens. So if we do that, we'll get 625 less 15 for the broker. No, didn't give us it. Not surprising. So we've got the orders. There it is at the top. Get the little circle up. Right. So we're trying now for 620. Hey, and we got it. So we're 5 cents ahead of the price that they're quoting on there. And that's brought in $605, which is not to be sniffed at for one contract. So anyone know what we're doing next? And it was January, wasn't it? Yeah, it was January. And the strike was 42.50. So we go one strike below, which is 40, and it's a put. And we haven't changed the main one, which is buy to open. There we go. And we got $6.10, $6.20, wasn't it? So we'll give them 60 cents. So we're putting a limit order in, good till cancel. If the price of that, no, they're all quite small at the moment. Silver's looking quite good. We'll have a look at silver. An exchange traded fund, an ETF that just follows the price of silver. So you see the current price is basically $20.87. And I'm looking at just the 24, so it hasn't got a long way to go. If you can see the strike price intervals here, we've got 24, which is what I'm looking at, and 23.50. So that means the lid has to be just 50 cents below, which is very good. Means we'd have to spend money on the lid. The protection is much closer. So 24 minus 20, we'll probably end up at 20. We'll probably end at $3.50. So that'd be about 21. So we're very close to what it is there. I'm calculating the number of contracts by working out what if we have the shares put to us, how many shares would we need to make it 5% of our portfolio? And in this case, it would be 2. And they're saying 340. Again, I don't know if it is 5-cent intervals, but I'm about to find out. And it is. And the live prices are 345 by 355. So we will go up to 350 and see if we can get that. And we go put a lid on it. 1 strike below, so that's at 23.50. And we got 350, so we'll offer them 35 cents. So if we go back to the portfolio, those trades have taken us over that 100,000 in cash there now. So that's what's happening there. There's a few more, and we've got, hang on, so half of 68 is 34, 35. We've got a couple of bob in stock buying power, but I think we should wait and get some better deals. At the moment, the VIX, which is the measure of volatility on the market, is in the wrong place. It's giving low premiums. You mentioned the training, Malcolm. I think I agree, it went very well. There were 20 odd people there. Quite a lot of them we've only had good feedback on it. And quite a lot of people have come back afterwards and put more money in. So they obviously liked what they heard. We're running it again on the 4th and 5th of March next year. Those who've already attended can do the repeat for 500. And we're going to put into it a different section on how we actually find the stocks, where we get the filters from and how they work. Going to reveal the absolute magic. So that's.
I don't think I'll be able to go to America and that.
The excitement would be too much. I realise that. Yeah, we've got the American trip also on the 29th of April. That's a biggie. We're going to the annual general meeting of Berkshire Hathaway, which is Warren Buffett's company. And it sounds like it might be in a boardroom. It's actually in a stadium. There are 40,000 people will be attending. So that's some annual general meeting. We'll also, we'll be there. It's a bit of a party as well on the night. And I think Owen's going to run in there's a run on there, but I'm not going in for that. It's Warren a Warren Buffett fun run. Well, he's not running, I don't think, so I'm not. We're also going to be in New York, where we will visit the NASDAQ for the opening of the session. I'm going to see if they'll let me ring the bell, but I doubt it. We'll be visiting Value Line to see the research, meet the guys that do the research and to question them. And we're going to across to Chicago. So it's New York, Omaha, and Chicago. In Chicago, we will be going on the options exchange floor, and we'll also be with John Naranja, who looks after a $1.5 billion fund, and he's on TV over there every day. He's a good friend to us. Throughout it, there are education sessions, training sessions right throughout the whole week. The cost seems quite high, at just under £8,000. I'm paying as well. There's no great profit in it. I'm paying. And that covers flights, all meals, all hotels, all transfers, and all the education as well. So only the alcohol isn't covered. So
we can't keep up with you. That's why, Jeff.
Yeah. So there are 20 slots. I would say probably 10 of them have gone already. So if anybody wants to come and join us, you need to put your marker down. We're looking at £3,000 deposit in October, and the balance be paid by mid-March, and that's going on. So if anyone is interested in that, by all means, let us know. But so the places are going. Right. Any questions? Anything else anyone wants to cover? Where's my friend Liam? Liam?
Yeah, I'm here.
So are you happy to update the dashboard for the club during the first week of November.
Yeah.
Thank you. So let me know if you need the login details. When I send the video out, I'll send the dashboard that we've already been looking at, and I'll resend out the login details so that any member can now go into Apex, the clearing back office, and see the figures at any time, which is no problem whatsoever. You can't do any damage in there.
I've tried, don't worry.
I didn't mean you, I meant Malcolm, really. Right. Okay, guys. I'll edit this down in the morning, put it out as a much shortened video, and we'll crack on. And so you'll get the next report on progress at the end of the month. And we're sort of nearly halfway through it now anyway.